What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex data, the short interest and utilization changes that we saw today. How many shares do they have essentially to use against us tomorrow, next week, the week after, at the current time? We're going to be going over the option chain as well because tomorrow is a massive options expiration day, not just for AMC, but for the broad market. It is the leap expiration for 2022. These contracts have been around for a while, and when you think about the behavior of the market over essentially the last 2 years, in the amount of time that these contracts have been available, there is a lot of open exposure in the trillions across the market on this specific expiration date that can help and kind of explain why we're seeing the price action that we are. But the overwhelming feeling and fear that a lot of people have right now is this the start, or is the market starting to crash, correct, whatever you want to call it? Now, I'm going to go over some things with you guys in this update as to what I think about the overall market right now, how it relates to AMC, and how will AMC behave in these types of market conditions. So before we get into all of that information, if you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day down 25 cents, 1.36%. Now, we got to think about this from a little bit of a more broad perspective. The S&P 500 was up about 1% today at one point and then finished over 1% in the red. That is a very rare thing in the overall market that I have not seen very many times. In thinking about what AMC closed at today, only down 1.36%, and compared to the other days when we've seen the market down 1%, and we've seen AMC go down about 15% on those days, this was a pretty strong day for AMC, and it held up very, very well. You may not think so, but holding above 18 and not falling really so far down along with the rest of the market. You can see this move down here. It was pretty significant, but it didn't move like AMC would typically move when the overall market was selling off. So a little bit of a silver lining there, but again, I would have much rather liked to see some green, obviously. Now, coming over to the Ortex data, let me give this a quick refresh so we get some of the more up-to-date information. We have utilization at 72.44%, 3.26 million return shares. That doesn't make a whole lot of sense again. Borrowed shares, 1.02 million. Net return of shares today, 2.24 million. Now, we know that there's a lot of these shares out on loan that aren't necessarily shorted yet, and they may not want to short AMC at these prices, which in my mind makes a whole lot of sense. So they've taken out the shares on loan, see the prices fall, they're kind of missing their entries if they want to short, and they're just returning the shares because they're not really paying that high of a cost to borrow. Now, we have 19.43% estimated short interest, still very, very high. Now, let's talk about this option chain going in tomorrow and specifically how it relates to AMC. So we have 50,000 call contracts in the money, 718,000 call contracts out of the money. A lot of puts in the money right now and a lot of puts out of the money too. Again, I'm going to go over this explanation really quickly again, but you guys have heard me say this many, many times about this $21 situation. Right now, the max pain is sitting for AMC at $22 a share, meaning that is the price that is going to benefit the market makers the most on an option chain like this on AMC, the craziest option chain that we have seen. So in order to really see a significant difference or a significant effect from options on AMC going into tomorrow or even the beginning of next week, we would need to finish at well above what the max pain currently is at $22 a share. Yes, it would be awesome to see AMC start to rally up above 20, above 21, even at max pain at 22, just to see the life really come back into Amy right now and see that buying pressure come back in. But I don't want people to think that just closing above 21 or above 22 right now is going to make that significant difference that is going to cause that massive run up that we are all waiting for. We would need to see a lot more in order to get on that gamma ramp. Now, let's get into this situation with the broad market and essentially what I expect is going to happen. Actually, before that, let's actually talk about the broad market in terms of the options exposure. So when we come over to the screenshot right here, we have $3.3 trillion of options notional, including $1.3 trillion of single stock options, meaning like companies like Netflix, who was tanking in the after hours today. Streaming is having some issues over here. We also have, so it'd be like NVIDIA, Uber, all of these other companies, single stock options. there's a lot of exposure on this options chain. So one of the reasons why you may be seeing some of the moves that we are seeing in the overall broad market, stocks randomly starting to sell off, is that these market makers are on the hook for a lot of exposure coming into the end of this week because of the fact that these options have been around for a very, very long amount of time. And since March of 2020, we've been on a massive rip overall in the broad market. Now, let's get into some of the things that are kind of weighing down the market right now before we take a look at the broad market and exactly everything that we are expecting to see, and then tie it back into AMC to really show you guys how this is most likely going to behave going forward. So, coming over here, what we're seeing a lot of is the Federal Reserve is in a blackout period ahead of its policy setting meeting next week. Now, the Fed meetings are always going to cause a lot of fear, especially right now. We saw the Fed start to taper their asset purchases, and when that finishes up, they are going to be raising interest rates. That is going to suck money out of the system. And when you see that start to happen, there's going to be less liquidity in the market, and it is going to really kind of push people into safer assets. We have inflation running super high. We have earnings season coming where Netflix just absolutely bombed their earnings coming out. The market is not liking what they are seeing. There is a lot of fear in the overall market. Now, it's a lot of a fear move when you really think about it. We kind of all know how many interest rate hikes that we're going to see this year. We're expecting between 3 and 4. I know that Jamie Dimon, the CEO of JP Morgan, came out and said that he wanted to 6 or 7, or that's what he was expecting. But you got to think about this. Banking institutions like JP Morgan are going to be able to generate more revenue in higher interest rate environments. So now let's get into what I'm looking at on the overall market, the S&P 500, and show you guys some things to really talk about whether or not we are going to see a very, very significant crash. Now, if you guys have been following my channel for a while, we used to talk about that 200 moving average on the S&P 500, especially in Q4 of last year, that was going to be the level that we were going to look out for if we were going to see a correction. Now, in all of 2021, we never saw the S&P 500 come down to that 200-day moving average. Right now, we are getting very, very close to that level. We closed at 446.75 in the overall market. In the after hours, we're at 445.11, and the 200 MA is right at 441.69. Now, what has happened in the past when the overall market sells off, corrects, and comes down to this level? Well, the last time that we saw this was kind of right after the initial rally off of those March lows. We saw 2 tests here and then a massive rally up. Okay, well, what happened the last time? We saw a couple of tests of this 200 MA back here in 2019. Then we saw it rally up, come back down, test it again, and then go on a very significant spike all the way into February and March of 2020. Then when we come back into 2018, this is where things start to get a little bit interesting. Test it and has a very significant sell-off. Now, this is where it starts to get a little interesting. I don't personally think that we are going to have a major market correction. But what this situation is telling us from back in 2018, this is kind of the Fed's taper tantrum. They had a repo crisis, and they were also having issues with interest rates at the same time, which sounds very similar to what we're dealing with here. So we know that there's a lot of money parked on the sidelines. Inflation's running very, very hot right now. But you got to think about what the market's expecting and what the market expectations are. The market is always going to try to price in the events or policies that are going to occur beforehand. In my mind right now, this is kind of what we're seeing. We're seeing the market start to price in this higher interest rate environment and what that is going to do to any given security. It's going to cause things to sell off. There's going to be winners and losers, but here's how we're tying this back to AMC. So there's a couple of things that we need to go over. One, a lot of people like to bring up that concept of negative beta. And they're using the 1-year beta, which is kind of irrelevant. Nobody really uses the 1-year beta to really get a good understanding of how a given stock will move. And I remember briefly thinking about this before. Shout out to Tony DeNaro, came on my stream a couple of weeks ago. He actually did the beta calculations. And if you take out the couple of days where the SPY, the overall market was in the red and AMC was skyrocketing, that is going to mess with the beta equation. The 1-year beta is actually positive if you take out those outliers. So, and on the 5-year, it is positive as well. So negative beta, not going to come and save us. But What we're looking at here is a very interesting situation with AMC. Now, we have seen the stock get shorted from about the 50s all the way down to where we're at right now with 18. In my mind, it doesn't really make a lot of sense for these shorts to be shorting based on fundamentals for AMC. It doesn't make any sense. The company is continually getting better. They're jacking up the short interest, and honestly, retail is not going anywhere. There's not really a whole lot that these institutions can do to really shake me off of continuing to fight for market transparency and honestly AMC and GME together. So what I see happening is AMC in the overall market could have some more downside left just due to the random volatility that we're going to be seeing ahead of the first potential rate hike, in my mind, would be coming in the March Fed meeting. So if the technicals start to turn around for AMC, that is going to be a signal to a lot of these shorts to start to get out. Now, we're going to need to see a lot of things in order for that to happen, or they push it down to a certain point where they think, well, this is kind of where we're comfortable taking our gains, and then we start seeing it start to shoot up. Now, remember what we were talking about a couple of months ago when all before this major sell-off that we had, if AMC were to fall and they were able to push it down to a lower price, what would we expect to see? Well, in my mind, we would see a lower price, but more shorting on the way down, creating basically a larger slingshot, or pulling the slingshot back more because we'd have more short interest just starting off the potential move at a lower price. The other thing that I really want to bring up is kind of education. I know this video is running a little bit long, but just stick with me on this one. The one thing that we've really started to learn about over the last couple of weeks, and something that I really want people to understand, is how options affect price. We are learning a lot of things every single day about the market, teaching people, getting people on the same page on how everything is really starting to work. Now, the next time a big options expiration date comes around, I would expect people to really see that, well, we are going to be able to create that gamma ramp next time like we've seen on some other stocks and kind of take advantage of those opportunities that we have for these big runs. So the ape community is getting stronger every single day, even though it may not feel like it. I know it really hurts to see the prices come down of these stocks that we really like and that we are so bullish on. I'm down. My average is 27 right now. It's not fun to see. But again, none of the price action is really changing my conviction in the long-term prospects of this short squeeze play or the fundamentals of this stock. In my mind, it's just a waiting game. They have trapped themselves and they have no way out at the current time, but that time is coming. So that is going to wrap up this update on AMC in the broad market. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a good evening, and I'll see you guys in the next one.